This is Derek from Trade Technicals Blogspot. I hope everybody is doing magnificent. In this video, I'm going to explain why we're going to be into this dollar crisis, what's going to move on with this collapse, and reasons why, and some stuff that can be done. I'll also put some charts at the end of this video for the US dollar and the bond bubble also. So we'll get started, and we'll first explain why there is debt, how the debt happened. I understood how money was created not through going to school, and I went to school for financial classes like accounting. They didn't tell me how money was created. No, they don't want you to know this. And you're not going to watch CNBC, CNN, or NBC and watch a documentary on how money is created. No, they won't do that either. I found this information out from the documentary Money as Debt, and then it was explained even better to me with the movie Zeitgeist Addendum. The original Zeitgeist and the Zeitgeist movement also explains it very well. So to summarize it, when you have a system like we do in the monetary system, in order for us to have money, we need to have debt. Without money, we wouldn't have debt. And if we didn't have debt, we wouldn't have money. Because if a bank needs to lend out money, or if a bank needs to borrow money from the central bank, we'll say the Federal Reserve in this example, they're going to have to pay interest. And when we had the interest rates before, from the dot-com bubble, what we had from the Fed, they'd bring interest rates lower and lower. And Greenspan just lowering the interest rates to try to stop the collapse from happening. In a sense, what he did was give a morphine shot to fight the symptom and not the disease, which means for a while things will be fine, but it'll just make things a little worse after the drug wears off. That's pretty much how it works out. So the way the money system worked out was, okay, so now I'm the Federal Reserve, and I'm going to lend you, the bank, $100 million. So now you got $100 million, but there's a 5% interest rate on this. So that's going to be $5 million over this X amount of periods you're going to have to pay us back. That money where does that money come from? It doesn't come from anywhere but debt. Every time someone says, I want to charge you this much interest, the debt overall gets higher and higher. And it's not just that, but these banks then take the money and now they charge interest to people like you and me. And then these credit cards will charge even higher interest. It gets higher and higher and higher, that at some point there's going to be more debt than money. Maybe there is more debt than money now. I don't know. I haven't checked the stats on it. It's pretty hard to find. In fact, I've had a hard time finding long-term dollar index charts. More on that at the end during the dollar index videos. So that's why it's impossible for this system to work. And yet we got President Obama who wants to restore lending again. That's fighting the symptom and not the disease. Another morphine shot. And this $12.8 trillion, that's what it's been so far, according to Gerald Celente. $12.8 trillion has been the bailout bill so far. And whether it goes higher or higher, who knows? And this means to me that we got the Chinese, we got the Saudis, we got the Russians, we got the Japs. They all realize now, or they're starting to realize, that we're not able to pay the money back. Americans have been consuming for way too long, and they have not been productive at all. At least not productive enough to be able to pay off this debt. But once again, how can you pay off debts when the monetary system is set up exactly the way it is? It just cannot be done. So now what I'm seeing is more and more people are finding out about this information on how monetary systems are created. And it seems to me the most logical thing that can happen is something's going to break out when more and more people are like, hey, wait a second, our dollar's fiat. And then what kind of revolution happens after that? And especially when most people don't have the money, they're the ones that are going to be on the streets protesting and doing all of these type of things and so on with everything. Now, there's two different types of mainstream medias that are going to, two types of medias that you can listen to. You got the mainstream, which is like the CNBCs, the Fox, the CNNs, and so on, and the alternate methods, videos like myself and so many other great people who have done a video. And I'm going to show you a clip here. This clip comes from the end of September of 2008 from Vision Victory. At this point, America was in distress. He decided to put the flag on backwards because of the problems that was going on. This is something CNN didn't do because they didn't want to tell you the stock market was crashing.
Hello, thank you for joining me on the Vision Victory channel. For the last several months, I have warned of a coming economic collapse. I have given a lot of data, facts, and video updates in regards to my assessments on the United States economy. What I am telling you today is that we are here. The United States economy will collapse either within hours, days, weeks, possibly a few more months.
This is what the stock market on the Dow was looking like when Vision Victory made the video. The stock market was right here, a shade over 11,000. I think when he made the video, the futures were down 1%. No big deal really, but nonetheless, the market was on its way down. And he gave amazing, great macroeconomic reasons why. Please check his earlier videos before then to see them. They were right on the money. And now here's the technical reasons. There are things in stock market trending which uses lines to determine if stocks are going to go up or down. We can make trend lines sort of like this, where this hits this support here, this support here, this support here, and it went through it. That usually means that the path of least resistance we have is going to change, which means it's now lower. And we have even indicators like this. Okay, it hit the top part of it and started selling. However, there was also a trend line like this, breaking this trend line here. This is a support downtrend line. If it breaks it one more time, there's a chance this could be going really low. Now we got these lines in the middle. They are moving averages. So this blue line, this is the 200-day moving average. When the 200-day moving average hit this level of resistance and then went lower, then that was bear market news. This moving average here, this is a 2-year moving average. It is starting to flatten out and go lower. Once again, that's not good news. And this one here, this is 260 periods. That will get you 5 years. So now the 5-year moving average is being used as resistance. See, mainstream media wasn't telling you this type of stuff and why there was going to be some areas for crashing. Also, this level of support, breaking this level of support did mean further downside. So what happened after this? Boom, the stock market fell. This is where he called it, right in this area here. This is the area at which he called it, and the stock market has went down ever since. So now I ask you which mainstream media that you would want to use. And after he said this, he also said in that video that he expected, well, here's the video, here's the clip.
The United States will pause, but what they will find out is the bailout simply treats the symptom. It does not treat the disease. Many have compared this to Japan 15 years ago, but the difference between Japan and the United States, Japan had a savings. The United States is already broke, so we're starting off much worse. The United States Treasury bonds will soon see a collapse. All this will unfold very quickly. When I first started making these videos, I wasn't sure how fast this would happen. I originally thought that we would see a stock market collapse, followed by a dollar collapse, followed by severe chaos.
He mentioned a dollar collapse after a stock market collapse. Well, we've already had our stock market collapse. Maybe we'll have more downside. I don't know. I'm not going to tell you if there's going to be Dow 4,000, Dow 5,000. Remember, we're going into a hyperinflationary period. So the best way to see if the stock market is stabilizing, to see if the stock market is actually going up or down, is to look at an inflation-adjusted chart. If we have inflation that is 4 times higher and you're looking, oh man, the Dow Jones is back to 10,000, things are fine. Well, if it's 4 times higher, dividing that by 4 is Dow 2,500. So that would be a crash to 2,500. So we have this dollar crisis moving on now. So what does this mean to prepare yourself? Well, you got to get rid of the US dollar. not all at once, but in steps, and there's not too many days left, because I don't know when this is all going to completely go to the collapse cycle. Like Gerald Celente, he talks about a complete economic collapse, as do I. I'm using it. He uses trends research to do it. He uses current events to form future trends. I use the Mayan calendar to form current and future trends, and they really come out to about the same type of deal for what's happening here. So get out of the dollar into stuff like gold and silver, into copper, into any other types of metals, but not just metals, assets, whatever you can use, whatever you can trade in a barter system, whatever you think you can use during a severe recession. Because there's going to be some stuff, like a lot of the collector items are just not going to, they're going to go down in value over the next few years, where food is going to go higher in value. Maybe you want to buy like 1,000 shirts and you just want to hold them to sell later. That is protecting yourself against the collapse. People will find out you got it. You can advertise that you have these products. You can trade it for other goods, because a barter system is very likely. Now, could we have a new currency? Well, the Chinese and Saudis and all that have been talking about it. Even Timothy Geithner says he's been open to it. So it's something to look out for, whether it's the Amero or whatever. It's all speculation. But what isn't speculation to me anymore is that this crisis is going to hit full throttle within the next 12 months, and something big is going to manifest out of this whole ordeal. And if you're ready for it, not only can you possibly survive it, but you could even possibly prosper from it. But even survival is really going to be the key, because many people are still not aware of what's going on. And there's going to be a lot of people that are going to have a lot of difficult times, because they're listening to CNN, they're listening to CNBC, and they're believing the lies and the propaganda that is coming from there. So that's why the fact that you're watching this video shows you're already one step ahead of a lot of others. So that's the best information I can give you on that. I'm going to finish this off by showing you charts of the US dollar index and the bond bubble, and show you some technical reasons for why we're going to fall, show you some key numbers to look out for, so that you can help, so you can, when you're tracking it yourself, you can see what to expect. We'll start with the bond bubble. TLT tracks bonds, and what a rise, what a fall. Here's the rise, here's the fall. The reason for the rise was because of the stock market crash. This is where the money was being put into, and then it just burst right afterwards. So if a stock market crashes again, I should be saying if, would the money go back into bonds? And after people seeing this, it would be totally wrong, in my opinion, to trust the Treasury bonds. If Peter Schiff says it's crashing, and he's got the track record he does, well, what do you want to do? So anyway, let's move on to the dollar. This is the chart of the US dollar, and it is declining. It's at $80.03. It's so low. It is getting hammered because of its fundamentals I was talking about. When a stock market comes down here, rallies, doesn't get anywhere near where they were before, then falls below this line, this is showing a lot of weakness amongst the dollar. That is, these moving averages here, we have this black moving average, that's a 200-day moving average. It's just going right through it. And that isn't that big of a surprise, because when it started to rally over here, this is what Mr. Schiff was referring to as a phony rally. If he is right, well, then this type of stuff happens. And this is a trend line that people will be following, and it's got a lot of work just to get to it. But this trend line got hammered. I'll show you this at the end to show you how the last few days have looked for the dollar. But you can see it is just getting hammered to all ends. It is just getting hammered. And let's look at some longer term time frames. This chart here is the weekly chart. This is going back to the turn of the century. And the dollar has been getting hit extremely hard. And we've had this rally, but this rally got us to a lower point than we were on the previous rally we had up here. So we had a lower high, which is shows weakness. I know one can say, well, Derek, if the pattern looks like this, maybe you can build an inverted head and shoulders pattern. Yes, if that happens, we will have one, but I don't like the chances that it actually does happen because of the overall bear market. These moving averages, this is a 5-year moving average that's trying to flatten out, and if the market goes below 84, 83, it's not going to flatten out because it's below the moving average. It's now coming towards this 2-year moving average. It's flattening out, and then this a 200-day moving average is the one that's rising. So it's most likely going to come in and just do a major U-shaped turn, something in that nature, if it is unable to recapture the 82, 83 level. This is a longer term time frame going back from 1991, and the moving averages here are showing this blue line finding support on a declining 3-year moving average. This one here is a declining 10-year moving average. The dollar is very, very weak at this moment, and breaking below this level here of about $72. I don't know how much lower this could go. I don't know how the crash would look. Maybe you could say it goes down to 40 or 30. I don't know, but I do think it makes sense that it's going to make some serious hits down below. And I'll show you what this candle looks like on the last little while. This candle here is from May 1st to, well, the end of the weekend before the Memorial Day weekend. That's how much the dollar has lost. So it might rally and then fall back again. That doesn't show weakness. If you hear this week, oh, the dollar's back up to 82, that's normal for stocks to do that and for the funds to do that. But this is the UUP, which tracks the US dollar. And it is just getting it is selling off majorly. This trend line is a trend line for the downside, and it cannot get broken to the upside. However, this trend line has got broken to the downside. So you could say, well, it's down too much. Well, it just broke that downtrend line, so it wouldn't be a surprise to see a fall of, well, what's the difference here? 24 is a loss up to 25, so even another 4%. It wouldn't surprise me to see this go down to 23, which would mean seeing the dollar go down to about 76 or 77 in this area here. It's just one of those things that just do not surprise me when I look at this dollar. So there's a lot of weakness right now in this dollar.